The best of Money Matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Pop Mart has taken investors on a wild ride. Since debuting on the Hong Kong Stock Exchange in 2020, the Beijing-based toy maker has grown into a cultural phenomenon and now a stock market standout. Over the past year alone, Pop Mart's valuation has surged nearly 600%, fueled by booming demand for its collectible IPs like Boo Boo, Molly, and Crybaby, and a bullish forecast for the first half of 2025. The company expects revenue to more than triple and net profit to soar by at least 350%. But despite these blockbuster numbers, the market's response was surprising. Pop Mart's shares dropped over 6% the day after the forecast was released. So what's behind this mixed investor sentiment? Is this growth spurt truly sustainable, or is the market starting to question the fundamentals behind the frenzy? Well, to find out more, joining me now is Jeff Zhang, who's a CFA and equity analyst at Morningstar. Jeff, welcome to the show.
Thank you. I'm very happy to be here.
Thank you so much for joining us. Well, Jeff, how have shares of Pop Mart been faring so far? I mean, what's been driving this momentum?
Yeah, thank you. As you mentioned, Pop Mart has been benefited from the ongoing popularity of its top IPs, including Boo Boo, the Monsters, Molly, Crybaby, and others. I mean, we know this mania, this craze, not only just in China, but over the recent years, Pop Mart has been expanding quite actively and aggressively all across the globe, including Southeast Asia, North America, and Europe. So we think the stellar sales growth globally over the past couple of years have been very much the drivers for its earnings growth as much as its share price.
I mean, Pop Mart began selling its shares on the Hong Kong Stock Exchange back in 2020, and the company's stock market valuation has jumped by almost 600% in the last year. What has sparked investors' interest in this stock, though, Jeff?
We feel this investors' enthusiasm may come from its very robust top-line growth and also its capability of generating operating leverage on top of this top-line growth. I mean, it's still being able to very effectively control the cost, while at the same time expand swiftly across the globe in the key regions such as North America, Europe, and Southeast Asia. So we think investors are incorporating the bright outlook for the pop toy sector, especially for Pop Mart, to expand its market share and global influence. So that's pretty much the motivation for investors to buy the shares over the past couple of years.
I mean, Pop Mart has said its profits are set to soar for the first 6 months of this year. Now, the Beijing-based company said it expects profits for the period to jump by at least 350% as revenues more than tripled. To what extent, though, Jeff, is this growth sustainable beyond the near term?
Yeah, we feel the first half 2025's results for Pop Mart should be quite out of beat everyone's expectations, should be quite satisfactory from the short-run perspective. That being said, we do feel this 350% net profit growth not be that sustainable going forward, given the higher base and deeper penetration of Pop Mart in most of the global markets, and that's currently have a deep presence. So on top of the 350% growth, we do estimate that Pop Mart's bottom line growth will slow to around 100% in the second half of this year and then further decelerate in subsequent years. So overall, we feel that despite the very strong profit growth in the first half, going forward, the expansion of its earnings will inevitably slow.
I mean, though, it looks like investors weren't impressed by the forecast, with shares tumbling over 6% a day after the toy maker issued that bullish first-half earnings forecast. Why weren't investors impressed, Jeff?
We think there could be a couple of factors that may account for the disappointment of investors. So despite the really strong growth in the short run, investors may be concerned that the first half of 2025 may signal the peak of Pop Mart's overall earnings growth. I mean, 350% at least is a very strong number to beat going forward. And some investors may have taken this chance to take profits, as they may hugely benefited from the prior gain of over 6 times, like I mentioned. So overall, we think the couple factors have already come into play so that investors in general may be more conservative about the growth outlook as well as the valuation of Pop Mart.
With that said then, Jeff, are Pop Mart shares currently overvalued?
Based on our fair value estimate, which we kind of take a long-run perspective, Pop Mart's share price is still above our fair value estimate, which may suggest a slight overpricing still. So despite the pullback in the valuation recently and our raising of our valuation, there's still a discrepancy in between, which many believe that they could imply the still elevated business risk of Pop Mart that we have already incorporated into our valuation. So despite the robust growth trend that we just mentioned, we do feel there are still high business risk behind Pop Mart's key IPs. For instance, instead of assuming that the resounding success could continue, we're kind of concerned about the future trend of popularity of its top IPs, including Labubu and Molly. What's being prevalent now may not stay relevant over the next 5 to 10 years. So to factor this into our valuation, we kind of assume a higher risk premium to discount its future cash flow than what the current share price is suggesting.
Then what are the key catalysts that could push the stock higher from current levels? And conversely, what might trigger a pullback?
We think it still depends on the sales growth forecast as well as the bottom line performance of Pop Mart. For instance, if Pop Mart's future earnings growth fall short of investors' general hope or even the consensus of the market, then we will likely see the further pullback in Pop Mart's share price and vice versa. So overall, we think market has been more prudent in valuing Pop Mart's shares, as many of the investors may believe that Pop Mart's earnings growth have peaked in the first half of 2025 and then will subsequently decelerate. And so we kind of hold the same view, but we still want to flag the high business risk of Pop Mart's IP business, the pop toy sector, as well as the licensing incomes generated from the IPs.
So are you seeing signs of speculative trading behavior in Pop Mart, especially following the IP-driven product sellouts?
There could be some speculations. We cannot really tell for sure that how much of the transactions are from speculations. But given the previous strong trend of the share price gain for Pop Mart, we think there are at least some speculations behind. But recently, there has been some pulling back of investors' buying activities, and some have turned from buying to selling and take profit. So we think the speculations may have turned to the other side.
So what are your expectations then for price performance over the next 6 to 12 months, given the current momentum and fundamentals?
Well, we do not provide short-term predictions on the share price. What we do notice is that the previous frenzy of the share price of Pop Mart and investors' enthusiasm may have worn off slightly. So right now, ever since the release of the profit alert, Pop Mart's share price has contracted by around 6 to 7%. So going forward, it's still highly uncertain to predict the movement of the share price. But we feel that unless Pop Mart could be able to deliver an even higher growth rate, the share price may be under pressure in the near term.
Okay. Then what are some strategies investors are executing when investing in Pop Mart? Are they investing in other consumer stocks as well?
Yeah, again, we're not really clear about the investment strategies of the overall market, but our observation shows that investors over the past 2 to 3 years have been quite keen on adding exposure to the new consumer sector stocks. So outside of Pop Mart, we're also seeing buying activities for Labubu Gold, which is gold jewelry that cater to the emotional demand of the younger generations, as well as some of its peers, including Blocks, which was listed in Hong Kong late last year and also saw some huge rally in the share price. So overall, we're seeing some continued favor to the new consumer stocks. But yet again, for its peers and also for the stocks are kind of in the same category, they are seeing some recent weakness in share price once again. So overall, we still remain cautious on recommending any addition of exposure to the stocks, as most of them still exhibit quite high business risk.
Some great insights from you there. Thank you so much, Jeff, for joining me today.
Thank you so much.
Thank you. That was Jeff Zhang, who's a CFA and equity analyst at Morningstar. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.